All right, folks, December 4th, Wednesday. Live stream, YouTube, Patreon, you know the deal. We're awaiting Powell. He's going to speak in about a minute right now. But as he speaks, we're going to continue to monitor the market reaction here and comment on what we have so far. So if you can hear me fine, you can see the picture fine in the VIX 15 minutes chart. Just let me know and we'll go right away. Okay, folks, I do like to look at the VIX and then the short-term futures for the VIX because we're more sensitive to this guy right here, the really short-term futures, than the actual VIX. Just a tiny little bit of difference. Not a big one, but it's easier to spot here. So, again, you see the drops, consistent drops that we see in volatility. The question now becomes, are we kind of finding some footing here? Appears to be the case, and if we do, then we're probably going to see a move higher in volatility, but we need that excuse for folks to begin to hedge. Could Powell provide that excuse by saying something about the policy or the risk of tariffs? Lots of questions are about to be asked. We'll keep an eye on it. I got Powell right here. And we'll watch and see what happens. But let's begin with, since the VIX here, gapping down, now beginning to come back up again, you'll see some impact. So you'll see Apple, for example, getting hit a little bit. Maybe Apple, again, if you look at the VIX, we said that it's going to be one of the most sensitive ones, the VIX. So if the VIX begins to climb higher today, I think that makes an easier choice for us to buy some Apple puts, at least for a trade. We're not looking for anything crazy. We're looking for a retracement, maybe to 235, 233, and then see what happens. But it is conditional on a pop in the VIX today that sustains. So right now we see the hedging pre-Powell. Once Powell opens his mouth, if we see more buying, then okay, that's the signal right there. Now, if we look at the other indicators, so again, the VIX, you looked at Apple, there is a response right there. VIX goes higher, Apple goes down, VIX ticks down, Apple comes back up. So there is a correlation, and that's why Apple been moving higher and dragging the market higher with it. It's the same thing here. When the VIX went down in August and then it cooled off, it just lifted Apple higher. It's not like somebody thinks there's an opportunity to buy Apple here. It's just the nature of the algorithms and deploying the inflows. So again, Keep an eye on Apple. VIX goes higher. Begin to grab some of those Apple puts at 240, 235, 240, 233. I would go to 240, 235 because I think that's the most rational trade that we can do right now. And to be honest with you, if you do the 20th and then you go with the 240, you see a little bit of demand here showing up and you sell the 235, the risk versus reward will be pretty good. So you're spending about 130 to make 360. I think that's a trade that once I see the VIX coming back up and sustaining after Powell, I'll go with this trade right away. Now, the other sensitive one is NVIDIA. NVIDIA not showing a lot, though. NVIDIA get caught a bit here because of Marvell. It kind of initiated some excitement back into chips. We'll see if that's going to hold at the end of the day or not, because NVIDIA is sensitive to the VIX at the end of the day. And here, an important development in NVIDIA remains to be seen whether we close like this or not. You see a breakdown candle, right? This is the top of a breakdown candle. Take the top of this breakdown candle, that's 142, which we talked about yesterday, right? Nothing is going to change in NVIDIA until we talk about 142. So right now, we're trading above 142 comfortably. So we're just going to leave 142 here as the important number. Closing above increases the risk to the upside that we could see again, this consolidation continuing. But if we reverse and close below, that's going to be another bad sign for NVIDIA, because today was the day where it should have moved higher and stayed higher because of the earnings from Marvell. So we'll keep an eye. This is what I'm looking at in NVIDIA. It's 142. Other big caps getting impacted a little bit by the pre-Powell hedging in the VIX. You see a little bit of impact here in Microsoft. But again, with NVIDIA going higher, you're not seeing a lot of it registering in the Qs, because Apple goes down, but you see then NVIDIA coming back up. So all eyes on the VIX. Let's see if they're going to continue to buy hedges as Powell begins to talk. But other indicators for the other markets, the dollar beginning to move higher a little bit, will be sensitive to Powell. The assumption right now is we're still in negative momentum, and we should be heading down to re-challenge the support. And that should be good for metals, but we're not out of the woods yet. We need to get that confirmation from Powell, so we'll watch, because the dollar is now moving a little bit higher. If the dollar moves higher, it's going to push the VIX higher with it too. So that leaves, if we look at gold miners, for example, another okay day for gold miners. For silver, all sensitive to the dollar. So silver is up today, I would say nicely, about 1% or so. And then you have, if you look at copper, same thing. That's disagreeing though. That's kind of going down, indicating that watch out, the dollar might come back. So let's see who's telling the right side of the story, copper today, or is it gold? Among the dollar-sensitive stuff, you see it a lot here. In the materials, you'll see some impact in the industrials, but it's mostly concentrated here. Now, if we look at yields and see if there is something new, the 10, we're heading down. Of course, as Powell speaks, we'll see what happens, but it looks like the 30 here retested 4.44 and decided to reverse down from the breakout of the falling wedge. So I think right now that we have a rejection and a move down in yields with no context, just technical pullback. That should be good for the IWM, but I'm not sure that we're out of the woods yet. Because a lot of folks would say that, okay, if yields are going to go down, then shouldn't we play somewhat such as a bull flag here in the IWM and go higher? Sure. That's the assumption for now. But you got to remember, because he's not finished speaking yet, and then we have the jobs data coming out Friday. So as far as the yields market, it's going to be a little more conservative than the dollar and the VIX's market. You can still make the bet if you'd like. For example, if you have IWM shorts for December 20, you can complement those with IWM calls for Friday, just in case you get that bull flag break. Otherwise, if you're not in the shorts and the IWM yet, you need to take this consolidation pattern, eliminate the possibility for bull flag. That's going to be after you lose, in this chart, you lose the close here, 238.77-ish. Let's call it 239. And you see the confirmation coming in here, because we got one right here. It gave us a pullback. So we need to see a little more if you're not in it already. If you're in it, you have to complement it with a hedge, just in case. XHP a little on the weaker side today, losing that handle a little bit, and that's what we want to see, but not losing the 50 yet. Lennar is weak. A lot of the home builders are weak. So again, we're not seeing a response yet off the drop in yields that we got so far. you look at the defensives, the IYR may be finding a footing in the 50. And I think if you're betting on yields going down after Powell and with the jobs data, I think you're better off buying the IYR or even the XLU, which flushed down pretty good recently. It's at the 50 right now. I think you see a little bit of a bounce here if indeed we go down in yields, which be honest with you, I just don't see. I think that we'll try to find our way higher again in bond yields. But the other thing I want to talk about is the banks. So the banks, interesting today, if you caught the morning brief, we talked about JP Morgan looking a little weak. So you see the point here, we're changing momentum, right? It goes to bearish from bullish. You begin to see the red line moving higher, negative divergence on the other side, all good signs that you see these wicks, right, the topping element of the chart. Now we have supported this trend line. If it is broken, we got 238.64. I think we find really good support at 235. If that is broken, then yes, we're going to close the gap. But the assumption right now is we go down to 235. So the trade that I would suggest if you want to play JPM is you go with the 240 and you sell the 2 for 35. And you notice that, again, the premiums are pretty good, 135 to make 360. That's pretty much closer to the same risk versus reward that we got in the Apple trade. So this is one idea that we might enter by the end of the day. Wells Fargo is showing the same thing. So all of the banks are showing some weakness. Here there is a gap. So 235 JPM. Wells Fargo is 70. So in the case of Wells Fargo, if you want to do Wells Fargo instead of JPM, you probably want to go with the 70 naked, but that's going to be a little bit of a riskier trade because it requires a bigger drop. So you might want to consider, for example, let's say 72, and you sell the 70, now you're spending 60 to make 138. It's okay, risk versus reward, but rather be the JPM trade because if they go down, if Wells go down, I think all of the financials will go down together. So just having exposure to one of them is sufficient. The other thing is Tesla. A lot of talk about Tesla always here. I'm not sure yet. I don't want to fire up some puts because it still looks to me like a bull flag. And I still see a lot of activities in the options market. So I'll leave it alone for here. If it breaks above the resistance, 252.12, and it manages to close above, then we can talk about calls. But right now, it's just leave it as it is. There's nothing for us to do. Bitcoin, before we go to your questions, Bitcoin not giving us anything today, just consolidating. The challenge with Bitcoin is a lot of folks don't want to sell right now because they have a sweet taste in their mouth. They went from 60-something to 90-something in a few weeks. And likewise, there are no buyers right now that we can find except MicroStrategy and the folks who are doing some scams to buy here at 96. But regular folks cannot afford to buy at 96. So a little bit of a stall here until somebody capitulates. Either the deep-pocketed folks on the sidelines decide to capitulate and come back in and buy more. Or the folks who are already in get frustrated that this is not moving and they begin to sell, so we go head down. But right now, we got none of these signals. We're going to go back to the VIX here and keep it because this is the most important thing. So we see hedging before Powell, reducing that a little bit, but we'll see what happens as he continues to talk. If we see something such as a move higher in the VIX again, that's going to be a really good indicator that at least some names like Apple are topping, and that's going to give us some trades. We'll do it right here. Okay, let's begin here, folks. NVIDIA, don't care. Up we go. I think NVIDIA caught some action from Marvell. A lot of the chips today because of Marvell. And again, whether that report is good or not, that's a different story. But you get an upgrade, then you get a report that beats, and now you see this big oversized reaction. I think it's overdone, but a reaction like this will cause buying in the chips all in all. It ain't just NVIDIA. So NVIDIA, I would say watch 142. Let's see how it behaves. If it loses 142, by the end of the day, that's going to be a problem. So 142 is here. It's a possibility for a revisit at the end of the day. And you can see that here, we got some resistance in the morning in or around 142. So it is an important number. I'm just going to keep it at 142 here for reference. If we stay up, close up, okay, then the risk becomes to the upside in the near term. But if we head down again to 142, lose that, then understand that NVIDIA doesn't have the energy to do a higher move right now, and we'll probably head down. Okay, I bought Octa December 88 calls this morning, hoping for a bounce to scalp after profit taking. I'm down 60%. That was stupid, or maybe I still have a chance. That was not needed, my friend. The trade was to buy the shares. You sell the 85 calls. You see that the 85 is not going to trigger the exercising yet. So you'll capture the majority of the credit of the covered call that you got. If you bought 88, you're not out of luck yet. I'm assuming you bought the weekly. Otherwise, there's no reason you'd be down 60. But if you bought the weekly, the 88 weekly, it could play out. Because see here, when you go outside of the upper bands, kind of hard to just keep pushing your way higher. But it's not impossible. The problem is by the time we get to 88, let's say by Friday we're at 88, the contract will be worthless either way. If it's not above 88 comfortably. So not the best trade here. If you're bullish in the name, you think it's going to go higher, I suggest that you aim for closing the gap and you go with a longer expiration date. At least December 20 will be sufficient. But again, you shot. You took a lotto on it. Didn't work out. Time to get out. Find something else. Wasn't UAL supposed to go down with the dollar going down? Yes. But the dollar is going down because it was up in the morning, right? The dollar was up in the morning. So here, it's just kind of consolidating. UAL, the airline, is just consolidating here, awaiting the dollar. So the dollar right now is still didn't give us a break yet. Didn't play the head and shoulder, breaking support. If it does, I think the transportation will go down, including the airlines. But we're still not having that confirmation yet. Do you think SMCI will go to the long side? SMCI, let's see what it's doing today. No, see, SMCI wants to introduce an alternative. And in this case, NVIDIA or Marvell, it loses a little bit of what's been doing recently. So, yeah, I think that Supermicro, the problem was here. We gapped down because of the audit. Now they say that the audit is okay. You close the gap and then what? Okay, what happens after that? You're not solving any of the problems that happened here. So Supermicro is not a long. I see it as an opportunity to short for folks who didn't short. And for folks who want to add to their short position, I think that this recent move higher would be a good opportunity because I don't think anything got resolved in Supermicro. Mav, I asked a while back and did not get an answer. Whoops, David, I'm sorry. If this is better for a video, I get it. Let's see here. How do you manage with long-term position, not a day trade, when you're up and the trade goes against you? I was up 2K in ExxonMobil, now I'm down. Do you set a stop loss, or since it's a long-term hold, you wait on it? That's a really good question. So let's try to speculate where we got into the trade, and now you see Exxon flushing down a little bit here. That's going to deteriorate the options. How do you manage something that is long-term? So when we talk about long-term, the first question that comes to mind, are we betting on something such as to buy the stock? Am I buying January or February expiration dates in the calls to own the stock at some point? If that is the case, then the fluctuation doesn't matter until you break a trend that suggests that, okay, the stock is not going higher in the case of calls. It's actually going down. And for that, you're going to look at the weekly chart. You're not going to see any sign here that the stock decided to reverse its course, and now it's heading down to create lower lows and all of that. You're not seeing any of that. So that's not going to bother you. But if you're doing the trade as a long-term trade with no intentions of owning the stock, the management becomes important. And the first step of management is, what is my profit target? What am I trying to achieve here? 20%, 30%, 100%? What is the resistance that I'm aiming for? Takes the trade. If you don't have that answer, you're going to be lost. And if the chart changes directions, all of a sudden you find yourself in a losing situation. So defining the profit is really important, because once you hit it, you made your goal from the trade. Now you have to ask another question. Do I still like the chart? Do I still see it going higher? If that is the question, then maybe we should roll to something else, a higher strike, a longer expiration date, etc. But sitting on a trade, as it moves your direction and you make profits without making any decisions, usually going to end up badly, especially in a volatile situation like we have here. The other thing about stop loss. Stop loss is something, and I said this repeatedly, folks, unfortunately, most people just ignore and then they complain. we made a whole video about how do we look at, before you do any options trade, you look at this table right here. You identify the time cut loss, which is usually half of the time limit that you have here. At the midpoint, that's your time cutoff. Where do I need to see the trade, the stack? Where do I need it to see trading at to decide whether I keep or abandon the trade? And there's a number that we identify, right, depending on what you're looking for. But of course, by halftime of the trade, you got to be positive. You got to be in profits because the decay becomes bigger in the second half. So we identify that number. And if we're at that number by the expiration date, then we're good. We keep the trade. If not, we cut the trade. There's also the price cut loss that we talked about. That happens at any time. Doesn't matter half of the time frame of the trade, or first day, second day, last day. Doesn't matter. There's a price, and the price is determined by looking at the charts. That if we lose support, here we have a breakout candle, right? The low was 114.96. Let's call it 115. So 115 is the cut loss. At any time we go below 115, trade has to be taken out. If you don't abide by these rules, I just think it's going to be a tough journey in options trading. And I try to do that many times and put the videos out. And unfortunately, people don't want to listen to the advice. But if you used it, you'll notice that your trades, you're cutting your loss early on, you're limiting your loss, and you're also maximizing your profits because you already have everything identified before the trade is entered. So I would suggest that we look at that video again and follow these guidelines and options strat and how we identify everything before we head into a trade. So I hope that helps, but I'm going to stress out on this point a little more. Mohammed Hashish. Hey, Mav, any thoughts on NEO? NEO looked pretty good. Yesterday in the morning was pretty good too. Let's see where it's trading right now. We kind of pulled back a little bit, but it was positive in the morning. So in NEO, I'm seeing a change in direction, right, from bearish to bullish. Your confirmation is a break and a close above this sloping line of resistance, which might happen at some point this week. If we do, then I think we'll see a lot of energy release in NEO. And you have a gap here that we could challenge. You have another high here that we could challenge. So it opens the path for NEO to go higher. If you don't want to rush into the trade, wait for a closing above that sloping line. If you want to do it right now, you can get it for cheaper, but there is risk involved because we got the resistance here and we stalled a little bit. No reversal yet. We haven't taken the lows. So all what it's doing is maybe pulling back a little bit, gathering some more energy and then cracking above the resistance line and giving us the confirmation. So I would say it's up to you, depending on your risk management. You want to wait for the confirmation, probably going to be at that point at 485, 480, almost 5. But again, I'd rather do that because once we crack above, I think the energy will be released and we'll challenge something here at the 550, if not 6. And the trade will be much, much better if we enter after that confirmation. INTC, Intel, what do we do with Intel? Intel is weak, and I don't think they're going to solve any problems. I mean, chips are doing okay today. Intel, no participation at all. To me, it's just, it looks to me that folks are capitulating. Whoever bought Intel here, and they thought it was cheap, look at the weekly chart. It's sort of a gigantic, if we expand this, sort of a gigantic bear flag that's going on here. And psychologically, it means that somebody bought here, a lot of folks bought, thinking that Intel is maybe too cheap and the government will do something, things will improve in Intel. And indeed, it goes from 20 to 25, 26, that's pretty good. But now, we're reversing these moves. We're going below the body of the breakout candle. So you'll see a lot of folks who bought here beginning to rush to the exit door saying, okay, you know what, I give up on Intel. Let's migrate somewhere else where it's actually working. And that could lead Intel back to the lows again. So this one is not a long for me at all. This is still a short. Let's do the USO XOM PCX. What is the deal with the energy today? Energy futures are down a bit. So about 2% WTI, 1.25%. I'm not seeing any reason from the dollar, though. The dollar is kind of muted today. So unless there was data that pushed crude lower, let's look at CL here, see when that happened, because we're trading positive earlier in the session. So you see here, there was a drop around 10 o'clock. Was it data that came out? Who knows? But there was a big drop here. We'll see if that's corrected or not by the end of the day, but there's something that happened here. And I think it's probably data that came out, but inventories and all of that. And that might have hammered the XLE a little bit. But then a day, look at the weekly chart here. See if we've taken any positive pattern out of the picture. And again, the breakout candle didn't take anything out of it yet. Half of the body's still intact. So in the weekly chart, energy is still, whether Exxon or PSX, I think we're still intact. For an investor, for a trader, got to be careful, because once you find a footing, then you can enter longs again. And this could be somewhat such as a cup and handle, higher low kind of thing. So I'm not seeing a problem here with the energy stocks. With the commodity, I think some data came out and pulled the futures down. That's my guess. XLE. We talked about XLE. AN thoughts. We talking about AutoNation here. Thoughts on AutoNation. If you look at the daily chart, maybe we're stalling a little bit, plug in the bands. Yep, we're at the top. Momentum's still strong, though. It's not super overbought. So let me look at the weekly and see what it looks like. Weekly, we're beginning to see bullish momentum showing up, improvement a little bit. I would still think that this has a little more gains to squeeze before it finds resistance. So I'm not sure if you want to buy the stock, if this is something that you want to buy. Let's see the dividend here. Doesn't pay any dividends. So if you want to buy the stock, I think you have a case, because you have sort of a inverse on the shoulder. You're now facing some resistance right here, prior resistance. It happened before, another time. So this is an important level to beat. Once you beat that, I think you head back to challenging the highs. So yeah, it makes sense. Maybe you want to wait till we beat these highs right here. If we give you a number, highest number in the pattern is 182, 183. So let's call it 183. If we do 183, you close above that. If we clean up the chart a little bit here, we don't need the Bollinger Bands anymore. If we close above 183, I think that you have a permission to go long AutoNation at least all the way to the top. And here you have your target of 197. Let's call it 200. So it's not a bad trade, even for a trade, but get that confirmation first, because we've seen rejections before. 1, 2, 3, or the stock failed to crack above that level. XLU and Coke looking a similar reaction. But with yields going down, stocks like Coke or Pepsi become more attractive. Why we see this reaction? Question is, why do we see negative reaction in Pepsi or Coke, right? If I'm getting the question here. So if we see Coke reversed, see that, yeah, that's a reversal breaking below 62.35. If I have calls out abandoned, because now we're risking retesting the lows, even with yields going down. So maybe there is a little bit of fear that yields will come back up Friday. If you look at PepsiCo, same thing. I mean, this one's still holding support, but yeah, I'll be a little nervous about holding calls right now until we see what the jobs data looks like. Because for all you know, I mean, even the XHB, the home builders, also heading down. The IWM not responding either. So there is something, even though we see yields coming down today, the market is skeptical about the drop in yields, as if they're worried about the jobs data, I think. So until Friday comes out of the way, I would say de-risk out of Coke and Pepsi if you got them. Although I think that the XLU is a better opportunity, because the XLU is still sitting at the 50 and it's not breaking anything, right? You see almost a revisit the low in Coke, and Pepsi also re-challenging the lows again. But the XLU looks a lot better. So if it is a bet on yields going down, I think you should start with the XLU, wait a little bit on PepsiCo and Coke until after Friday. Okay, David, you got the Exxon entered back in October, and you own the stock. Okay, so you own the stock, you entered the trade. Gotcha. But again, I would suggest that if you enter in a new trade, let's do that. Let's just practice for a week or 2 weeks. Practice doing that. Let me do the pre-trade assignment of identifying the risk, the price cut loss, the time cut loss. What is my goal from the trade? Looking at the table right here, for any trade you do, what is my goal? What is satisfactory for? Because I might get to 96 right away, get a little bit greedy, but if the stock moves up again, in this case of Wells Fargo, then I'll be at the same percentage point a few days later. So I might just book the profits right here. It makes sense to book the profits right here and not be too greedy and look at for the maximum return, because stocks will fluctuate, get oversold, come back up, and might at the end of the day lose it all. So at some point, we have to also identify the profit taking before we enter the trade. So if you do that, I promise you, 1 or 2 weeks just doing those for every trade you enter, you'll notice that the results are completely different in a positive way, of course. Good morning, Maverick. With the Dixie going down, hold your horses here. I don't think it's going down, okay? So Powell is still speaking, and you have a lot of macro data coming out. It's showing signs of weakness, okay? It's showing signs of loss in momentum, but it didn't break support yet. So that's not going to give you any real sustainability in copper or even the gold miners. Of course, we'd love to see at least a correction of the dollar, because I think that this is not sustainable. A lot of this is just trade war fears. Other currencies go down, dollar goes higher, so we see that impact. But for now, yes, you got no confirmation. Even the Chinese names, you got no confirmation from the dollar alone. The dollar needs to go down a sustainable way before you see some of these names finding a footing. As to the sensitivity, I mean, you see here, right? We got the stimulus, China goes higher, but then the dollar keeps firming up, and it makes it harder and harder for these names to move higher. So I would say if you're not in BABA, if you're not in FXI, if you're not in NEO, wait a little more. Just wait for Friday till we get that confirmation. If we crack below support, you'll see everything that is dollar sensitive beginning to move higher in an aggressive way. Okay, you got the XHP, Thomas. The 120 puts for 12/13. Then you got the 122 for December 20. Spread need management. Suggestions, please. Okay, so you have 120 and then you got 122 for a longer expiration date. I think the chart is supporting you today, so the 122 is already in the money. The 120 is the one that we have to worry about because we got about a week. You're at the 50 days moving average right now. You lose the 50, I think that you're probably going to book the profits from the earlier expiration date, the 120 for December 13, and then play with the 122. The 122 for December, if you crack below the 50 days moving average, you probably want to sell something such as the 117, which is the next support. Let's see where the 100 is. Yeah, around 117. So maybe at that point you keep 122 and you sell the 117, but after you crack below the 50. So right now, your trade are working out. They're okay. They're on track. But you'd love to see a close below the 50 because that's going to at least initiate profit taking from one leg and then leave the other leg to open a spread on it, sell the 117, give it a little more chance of becoming profitable. CRM still expected to go down. CRM, yeah, I don't think that report was pretty good, to be honest with you. And if we look at the behavior so far of this chart, it looks to me like a bear flag pattern. I think we trimmed some of the gains. I'm not saying that we go negative and we go below the gap and all of that. I'm just saying that we trimmed some of the gains because the report was not that impressive. We've already factored in a lot of good news in CRM. I mean, we talked about these patterns before, folks, in the charts to watch, right? We talked about positive patterns, broke out. We accounted for a lot of the gains. I think that CRM will correct a little more. It'll probably head inside the Bollinger Bands before the end of the week. The VIX bullish divergence, the Maestro way, which a name that I do like. Yes, I agree with you. We're beginning to see a little bit of positive divergence, a tiny little baby sign of life, which is, if you look at, for example, you're not going to see it in the daily, but you look at the 30 minutes, you'll begin to see some positive divergences showing up in the RSI. I'd love to look at the hourly because that's the leading for the daily. And if you look at the hourly, just study here the RSI, right? Flattish, flattish, flattish. Couldn't do anything. Now it's beginning to find that positive divergence. You're beginning to see it in the MACD too. But it's way too early. You need to see something like this where it comes back down and then the RSI heads higher again. That way you have the confirmation for sure that we have positive divergence. So this is why I say that maybe there's hedging before Powell, but will the hedging continues after Powell? That's the problem. So if they continue to hedge after Powell, then that's going to be for me a sign that, okay, VIX bottomed, VIX is heading higher, equity is coming down. It'll be led by Apple, the one that's more sensitive to the VIX. So again, you see it here, moving higher a little bit in the VIX. So we'll keep an eye. I think it's the most important chart to watch for today. You can watch this guy too. It's important to just have a perspective between the two. But the VIX going higher by the end of the day, showing more demand. I think it's going to see a bigger impact in the market. Hey, Mav, I'm holding PG, Procter & Gamble, December 20, 175 puts in profit now. What would you have the target as profit? Okay, that's a good question because we talked about Procter before. I own the stock, but it got a little too excessive, right? We got a little bit of a topping sign here. Maybe you shorted at some point right here, and now you're back down. So let's see if we have any supports in the averages. 50 is nowhere near, 100 nowhere near. So we have to look at the 20. That could be the possibility that you can squeeze a little more. So you have to go your trade here and look at what are you going to get, what are you going to gain in the trade if we go down to the 20, which is about 172, let's call it 172 and a half. If it's not a significant amount, then I think you should be booking your profits right now and not take the risk. If there's a significant amount, then sure, maybe take 50 off and leave 50 off because there could be a little more correction to do here to the 20. But bear in mind, it looks like the stock found a footing today from a level that was resistance before, support before. So let's call it here. The high is 171.76. The bounce today, the low is 173.46. So pretty close. 173.68, 173.46. I'm just going to call it here 173 and a half. That could be the support that Procter needs because the correction was just to get out of the extension of the Bollinger Bands. So there is risk of holding the trade for too long, right? You could actually move up again in Procter, especially if yields go down. And they're down at least right now. If this was my trade, I would at least take half off and leave the other half if this is worth it. Going to the 20 is worth it. Okay, PepsiCo, Coca-Cola, holding call spreads. Would you cut those as well prior to Friday? Yes. PepsiCo and Coke right now, especially Coke, showed a negative pattern today. So it doesn't make sense to hold in the call spreads right now. I say we cut the loss and see how it works out on Friday, if there's a move in yields, because this is quite an aggressive move here. In Coke, down about 2%, on a little bit of an elevation of volume, cracking below 62, 63. Oh, yeah, a lot of bad signs. You don't want to find yourself at 60 or 61 and then trying to manage the trade. So let's nip it in the bud right here and then see what happens after Friday. Senior, I have BITI, 25 calls for December. I'm with you, my friend. Theta is killing me because Bitcoin is not moving. I plan to reassess the trade on Friday. Should I roll to a further expiration date or take my loss? I'll be back in the green if BTC is below 95 by Friday. Yeah, you just need a little bit of initiation of the move in BTC. You'll be in profits right away. But the problem here, my friend, is with this consolidation and playing out the negative momentum, and it didn't give us any flush. As I said, it's a battle, psychological battle. You might see the potential buyers on the sidelines capitulating and buying. If that is the case, you could see a pop higher, then the trade is dead for sure. The BITI. But if you see the folks who are already in the stock, in BTC, being frustrated and selling, then you'll see that initial flush and the trade will be really profitable. So what do we do in this scenario? Since we got into a trade, it's not been working out, it's been just consolidating here. It tells me the discipline says that since we don't have a break, we have to wait for the break to happen before jumping on the trade. So suppose there was a break to the downside in Bitcoin. We get the flush finally. I think it's going to be more where that came from because more folks will abandon the 100,000. They realize that's not going to happen. Now they bought here. They're afraid that they're going to go negative. They bought here. They're afraid they're going to go negative. And we see sort of a bigger move. So once that initiation happens, I think you jump back into BITI calls. But right now, there's also that risk that it could pop higher if the buyers decide to jump back in. And this is why I say the discipline says, let's take it off. No need for stress right now. Let's see something that's already working out. We just follow the momentum, up or down, until this one breaks out or breaks down and gives us the opening. Okay, I'm not seeing Powell here. Let's see if Powell is saying something important. CNBC. Not ABC. CNBC. Okay, he's talking about some issues here. So, the unemployment is still very low, making progress on inflation. Okay. You should go down on your knees, buddy, and thank the dollar for coming back up, because that's what's holding everything right now. Dollar comes back down, forget about it. Okay, so he's just talking positively. Economy in a good shape. There's no reason it can't continue. We'll see about that. But let's look at the VIX here, because that's, to me, the actual review of what Powell is saying. So if that guy keeps moving higher, it means that there's more demand for hedging. Since we've made a high, right? The high was 1361. I think that's an important number to identify. 1361. If we move above that number at any point throughout the day, I'm going to initiate those trades that I talked about on Apple and JP Morgan. And that's going to be a starter. And then we'll see what happens. If there's more where that came from and the VIX begins to move higher, then we're probably going to add more to that exposure. But I think it would be sufficient if we go 1361. It'll be sufficient to go with Apple, JPM put spreads, really small, and then see what happens after that. Let's do here, see what you guys got in Discord. Okay, Claude. You closed your Toast put for Friday. Let's look at Toast. What is that guy doing here? Toast. Toast is toast, I guess. We usually, yeah. Look, if you have the puts, see, this is. Thank you for bringing that example. Okay, because a lot of folks look at these charts like this that went higher, and they want to short them, right? And they want to short them because of this, because he'll make 400, he'll make 300% worth of gains. Problem is, sometimes you short these charts that are going higher, really overbought. It just keeps going up and up and up, up. So look at the example like Twilio, right? It just keeps going, even though these are extreme overbought readings. But for those that actually do crack, yeah, they produce huge profits. So when we deal with a situation like this, when you look at the overbought chart, extremely overbought, you're betting for a reaction like this, discipline becomes really important. Meaning that I enter, for example, puts at this consolidation, then I identify a certain level of the highs. If we move above, wrong time for the trade. Cut it, wait in the sidelines, see another sign for weakness. Stall, for example, that's okay. You can enter, but the trick is to identify a cut loss, which is a level that we go above. That means that the timing is wrong. So here, I think you're persistent in the trade, and it did play out at the end of the day. So congratulations, 400% worth of gains. That's pretty good. And that leads us, by the way, to GoDaddy, right? So GoDaddy, same thing. One of those crazy charts that just keeps going higher and higher and higher, no matter what it does. If you're lucky enough to time the flush, we've seen one here, right? So it's not impossible. We've seen a flush right here. If you're lucky enough to time it, you'll be paid handsomely. If you're not lucky in timing it, you'll be in a situation like this. And again, if I shorted GoDaddy here with puts, I think you didn't do anything wrong, because the look in the MACD was similar to this guy right here, where we got a flush down. Here we see a bounce, continuation of that momentum again with a big pop here. I'm not sure for what news or what reason. It says that JP Morgan, some analyst lifted the price. There we go. So it kind of kills the trade right here, even though the entry was pretty good, I would say. If you entered, the entry was pretty good. It's just some analyst decided to upgrade, and we see a pop higher. So that now kills the trade because it's trading above the highs of the consolidation. If we see it moving down, taking half the body to break out, or the lows, then we can enter the puts again. So these are really challenging trades. But like I said, higher risk, higher reward, and the payment can be the 400, 500%. That's why people do it. Okay. Hey Mav, do you play a big head and shoulder like this one in CPB beginning April 2024? What kind of trade do you recommend for that kind of pattern? Okay, great. So let's do. It was my second entry. See that? The guy was persistent here. We go back to toast. So he entered one. Let's do toast here. He entered one put. Probably didn't work out, right? He kept going higher. Added more. Again, see, when these trades, when you hit them big, and that's why we love them. But boy, they're challenging. But let's talk about CBP. Or excuse me, CBP. We're talking about Campbell's soup. I see what you're talking about here. You're talking about the possibility of a head and shoulder. So the shoulder begins here in April. You got your head. Now you're forming another shoulder. How do we trade that? Obviously, we take the lows. So here there was support that led the chart to go higher. So this support is important. Let's identify that. It's 41.97, so we just call it 42. 42 is a confirmation that we're heading lower. So leave it right here. Of course, if we go down after 42, that's going to be target number one. You lose that, we're heading back to the lows. And the lows here are sitting at 39, 39.71. So the range is really tight, but you're on the right track here, that it is a negative pattern, and it should lead to more declines. Now, after that, of course, we begin talking about the 19 lows. So one step at a time. Right now, yes, it showed enough signs of topping, head and shoulder, and here you got a top, you got a big confirmation with a bearish engulfing candle. So it has a lot of problems. And we know that this company needs to be restructured sooner than later. So that's the only risk that you're going to have. That if the restructuring happens, somebody buys the company, okay, then we see short covering. But I think between now and then, we'll see more pain in Campbell's soup. And I bet we'll revisit these lows here at 39. Thoughts on PALL, Exxon near term, Marvell, do you see a retrace down below 115 this week? What is the resistance near term? For Marvell, since you have a big pop like we got today, the technicals don't matter as much. It's more of a mechanical thing. So when we look at Marvell, there's no resistance here. You can't really identify resistance from this alone. You can identify that it's overextended, sure. But then you have to look at the open interest for the end of the week, and that's going to give you the resistance. So if we go Marvell, option pricing, and then we see here, we'll see what they bought today, but we still see volume. See, the volume is still high here at 125. So I think that when we wake up tomorrow, we'll see more open interest added for 125. Nothing being added in the puts here. So to me, that leads me to 125 as the number, where we find some resistance, because the market maker probably doesn't want to go beyond 125. Now, if it pulls back right now, can the market maker do that? Yes, they can. They can flush it down below 110 to make sure that the majority of the 110, 115 and above expire worthless. But that's not going to happen pushing it below 110. Not going to happen without a rise in the VIX, without the market maker looking at other external factors besides this chart and figures out that there is a downside risk. So if you don't see the VIX going higher, I would say that the probability would say that we go to 125 in Marvell, and then we find resistance at that point. As far as PAL and Exxon, do we stick with those or not? This is dollar sensitive, so the resolution of the dollar is really important. I mean, you're seeing here what's going on with gold and a lot of the metals. They want to move to positive momentum. They're just waiting for that permission by the dollar. So Friday is going to be an important day because that's the jobs data, and the jobs data have an impact on the dollar. The same goes for Exxon. Right now, energy down, but Exxon, we want to lose the lows though here. So the lows 114.84. Yeah, I don't want to lose those, because if you lose those, now you're gonna revisit some of the gap here at 113.5, and that's gonna do a bit of damage on the weekly chart. It's gonna lead us all the way to the lower weekly bands. And that's not what we want to see here. So Exxon, energy still, I would say, metals, palladium showing better signs than energy stocks right now, at least after the flush that we got today. So it is important also to understand why did crude oil go down today, and will that be sustained or not? Because there was something that happened here. Again, I will look at the data. We'll see that there is data. If there is no recovery in crude futures, then I would say that you have to be careful with the energy exposure. At least add some puts. If you own the stocks, add some puts as protection. If this data leads crude oil for more declines to come. Okay, let's do here. Would you run through Nike? Sell calls for Jan 10, 82 management execution. So Nike, we talked about the elevation of calls yesterday. And again, if you sell the 82, for example, let's see here. Nike with a higher IV rank. If we sell the calls, see, implied volatility is quite high for Nike. I think people are anticipating something, so we have a report coming out here on the 19th. That's going to keep the options elevated until that report is out of the way. So one thing you can do is you can sell the 82 calls, right? And or the 80 calls even, because that's what they're doing. You can sell the 80 calls, get the credit, and if the stock moves down between now and then you capture some of that credit. But I would definitely not hold it all the way till the expiration of the earnings report, because for all you know, we could see a pop higher in Nike. I mean, after all, this is a suppressed and beaten down stock, so it'll get excited by any kind of good news. I mean, it says here the 18th is the 19th, so the 19th is the report. So what I can do in a short call trade is just sell the 80. It captures some of that credit. Of course, you have to identify a stop loss. The trick in this trade is to identify a stop loss right away. So you don't want to hold until it gets to 80, then think about what you want to do. And if it gets to 80 right away, by the way, it's not going to be a problem. So you don't want to panic right away, because you can hit closer to the expiration date of the 19th, and time decay will kick in either way, and you'll be profitable. So this is really important to look at. This is why I suggest that we all use option strat. Right, so you can see the visual here and know how to manage. But let's say that the Nike goes to 83 or 82.5. Now, it doesn't matter if you have any decay in the time value. You're still going to lose money on the trade. Then you have to buy it back, right? You have to buy the 80 leg back. So the stop loss for me would be here 80 exactly. If I go to 80 at any point, tick above 80, buy, let's say, right away in the first 3 days, that's okay. But if we go above 80, between 80 and 81, I think I should consider whether I should stay in this trade or not. Because if it continues to go higher, it's going to be a problem. But again, it's a good trade because you have elevation of value before the report comes out, and you have time decay. Okay, so the trade kind of works with you or in your favor by nature. So I would do it, but management really important. Okay, thoughts on UAL. Any thoughts on UAL? We talked about UAL and the dollar, right? So unless you give me the conclusion on the dollar, what are we going to do with the dollar, right? Is it going to break down? If it is, Friday, today, if we break down below support, I think that UAL will also break down, along with the other airliners. But if the dollar continues to go higher, you're still going to find buyers here because that's what they're betting on. And you see a lot of these travel names doing the same. So right now, I'm sticking with the 90 puts, December 20. If the dollar goes down Friday, I think we'll see a crack, and then the trade becomes back on track, the 90 for December. But there is not a reason or an incentive to continue to add to a put position right now, speculating that today is going to be the day, tomorrow is going to be the day. Just have one with the sufficient expiration date, 1 week, 2 weeks from now. See how that works out. If it does work out, then we can add to it, because we're timing something to happen, and so far it didn't happen. Thoughts on Mark. I have a strong position in the stock on Amgen, OFC. So Mark, Amgen, I got them too. I'll stick with them. I mean, Mark looks pretty good here, inverse on his shoulder. If you look at the weekly chart, what you need to see is the closing above the top of the breakdown candle. So 103.40, if we close above that, that's a confirmation that Mark has already bottomed, and higher we go. I think 110 will be a reasonable target at the end of the year if we indeed close above 103.40 on a weekly basis. So we'll stick with Mark here. As far as Amgen, I think that Amgen is still going to find a footing here and close this gap in its entirety. and head higher again. So you have a bull flag. Let's stick with that. I think in time it's going to make the gap and then trade above the gap because it is gaining market. It will gain market share in the lucrative Ozempic competition. And that alone is enough to add more revenue for Amgen. So I think the stock would be appreciated and would close the gap, head higher. I'm not worried about those two. Datadog, is it better short than CRM at this level? You know my opinion about these guys, right? I'm not super bearish on the software, right? Software will just play pullbacks. So Datadog, this is not toast, okay? This is a company that's catching a bid right now, and it gave us earnings, and we're getting more and more good news about software, more inflows. So does software makes a good short? No. Software makes a good long if you want to buy anything. But some of the charts that went way higher in the daily chart and the hourly chart are worth playing pullbacks in, and that's CRM. But I would not short Datadog right now. It's just a pullback. See, we got a little bit tiny of a pullback, and then we came back up. So they're still strong. The software sector is still really, really strong. And unless we look at the IGV and you see the positive divergence, still we got negative divergence, so we're not out of the woods. But unless we see that playing out and we see a reversal, then we can talk about shorting software. But right now, I think there's a reason why folks love it, because there's no tariff risk, at least for now. So it makes sense to migrate software. Apple and NVIDIA both have 2.5% IV rank, waiting till Friday for the strangle play unless J. Powell starts yapping. That makes sense, and I think, again, with the IV rank is 2.5, you're going to get rewarded. I would say almost 80% chance that the trade will be profitable. Okay, Xeon, a trade for that one. Xeon following the regional banks, and look, I see weakness in the banks beginning to show up finally. All of them are doing the same thing. So, unfortunately, even if you go with JPM, right? If you go JPM, plug in the price target, it's the same chart. It's the same identical chart. Now, is Xeon has the same strength and the quality as JP Morgan? Of course not. But the market is treating all of them the same, and they're moving based on JP Morgan and higher quality names. So, with that understanding out of the way, do we need to make a trade for Xeon specifically, or do we need to do a trade for, let's say, the most lucrative and traded options? We can find volume and better pricing. I think the answer is clear. We can do the better pricing, and we can find that in JPM because it's the same trade. So go with JPM puts, not Xeon, because if you go to Xeon here, I don't know if you're going to find volume. If you go December 20 and switch to puts, buy puts, see, you're not going to find volume here. If you go 55 and then sell the 50, right, you're spending 31 to make 4, which is a good risk versus reward, but the spreads are wide, and you're requiring a 6.8% drop. So I think that JP Morgan, the puts that they gave you for JP Morgan, makes better sense as a play for Xeon and the rest of the banking sector. Regional, big banks, doesn't matter. I think all of them are trading together right now. Does Option Strat buy and sell options? No. Option Strat is just a tool for you to visualize. So the brokers have tools like this, by the way, but they're just not as good here. The brokers don't have such good visual and organization like this. So I think it's really helpful for any trade that we enter, that you identify the stop loss based on the charts. You identify stop loss, identify the time limit. Where do you need to be? You play with scenarios and the volatility to see how it's going to play out. Is the volatility going down or going up? And how that's going to impact your returns. I think that's really important. Otherwise, if we just roll the dice, enter trades randomly, some of them will work, but a lot of them will not work. So, and we all do that, by the way. Don't think that every trade that I enter, I'm writing with a pen and paper. Sometimes I will also swipe. But again, I'm committing an amount of capital that if I lose, that's okay. I'm going to live. It's not something that is detrimental to the account. If I'm doing a detrimental trade, then yeah, I'll do a lot of pre-trade homework in strict management. Okay, NVIDIA attempted to buy the 150 puts, betting on a retrace down, especially given the IV level. Thoughts? I'd rather you wait for the VIX to show signs of life. It is showing some today, but we need to see a little more. Because now with Marvell, you could see more inflows into NVIDIA. Folks are speculating, but you still hear This is strong inflow so far in NVIDIA that we're seeing today. And you might see it trying to challenge the highs again. Is it overbought in the hour? Yes, it is. But I need to see the VIX showing a sustainable sign of life. And right now, look, the VIX is moving higher, so you might be onto something. But let's see the VIX closing positive, above 1361, moving up again, preferably if it takes this consolidation right here too. So if we go to 1388 by the end of the day, yeah, I think that at least it would be worth speculating in NVIDIA first before we go into a bigger trade for December, for example. Let's do a weekly one. If, once again, the VIX sticks higher. So I'll do something like this for the week, for the 6. And we're not going to go too aggressive. We're just going to bet for 142 because that's the support. It's going to be here, 143 or 140. So 143, 140. You're spending about 45 cents to make 250. That's a really good risk versus reward. And the reason is the implied volatility is the lowest we've seen in a while. So we start with this. If it works out, and we see the VIX moving higher and the NVIDIA reversing, now closing below 142, okay, now we can talk about, let's do the 140, 130, and go for Jan 10, right? And we spend 260 to make 7, more of a serious trade. But let's begin with that. Let's begin with the 130, 143, 140, if, once again, the VIX closes above the numbers that I gave you. Is the index ever going down? You need the VIX to go higher, right? You can't, if the VIX continues to go down, because folks think that I don't need hedging because seasonality is good, let's take the hedging off the table. You're sending the algorithms the signal to buy the index. The index is heavily dominated by the big cap technology stocks, so they get bought randomly. Again, nobody in their right mind can even explain this and say, oh, we're going higher because Apple is such a great company, or expanding revenues, or expanding profits, or China sales are recovering. There's absolutely no fundamental reason. The stock should be down here at the 160s, 150s, if it has a fair value. I think that's why Warren Buffett is selling. But there's a mechanical aspect in the market, which is the algorithms just buying. And there's an unlimited fund where you can pull money out of and keep buying the stocks, so long as we see hedging taken off the table. And that's why you see Apple going higher, and it's really hard to hit the indices with Apple going higher like this. Give me a change in the VIX direction and a reason for investors to begin to hedge against the seasonality. And then I'll tell you right away that, yes, we're going to have a correction in the NASDAQ and the S&P, and it's going to be led by Apple. XPO continues to go higher as its competitors retrace. Is this being artificially pumped higher? I'm with you, David. I'm with you. XPO been one of these names where you see FedEx going down, UPS going down, but XPO keeps going higher. I think there is a reason here where folks are just getting inflows and accumulation in it. Maybe because it is the smaller name in trucking. I think there's a lot of manipulation happening too, because it doesn't make sense at all. The reports, I think we looked at one of them. The reports were not really that impressive. The beats don't really merit what's going on right here. But XBO, again, one of those names that unless you see something in the weekly, as in reversal, like here, that gave us a pullback. Here, gave us a pullback. Here, we're not seeing any reversal. No bearish engulfing, no taking half of the body, the candle, nothing. So unless you see that, you don't want to short XPO. You want to pile in against the weak, right? So if there's something broken, like, I mean, FedEx is not broken. I would not consider it broken, but UPS might be broken. I think you're better off piling in against this guy because it's been weak and folks shorted. Now probably going to short again. So you're better off shorting UPS the week than trying to speculate on a top on XPO. Hey, Mav, any thoughts on what hit ALB hard today? Let's look at the daily ALB. Yeah, I got flushed a little bit here. Not seeing any news. There's no news coming out. The dollar is not up by much. So let's look at the options market, see if there's something that happened here. ALB, okay, so we have buy 95 puts, sell the 105 calls, sell the 105 calls. So somebody getting out of the calls, buying the 95 puts. I mean, it's a small amount, but if there's no resistance, then they probably want to retrace it all the way to support here. So to me, this is considered a reversal, right? You had a consolidation pattern at a higher low, and this might hold, by the way. So we're still not completely gone. The low right here was 99.58. If you hold that, sure, you still got a higher low, but that's for an investor who's holding the stock. I would set my loss at the low right here, 99.5. If you're a trader, you got to understand that if you have call options, a drop like this is probably going to be followed by more where that came from, and it's going to decay the value of your calls significantly. So in this case, you probably want to either cut and then see how we hold in that support. If there's a rebound, then you add it again with more quantity and you see a recovery. But right now, it looks to me like a reversal candle, unless you see something like this, because you see this is a reversal candle, right? You had a topping candle right here, followed by confirmation, but then came a reversal where we find a footing and moved higher, and you see ALB heading higher. You need to see the same thing here. This is a flush down candle. It means that we have more where that came from. If we get another reversal here, closing positive, okay, we can re-enter and head higher again. Okay, Stone, this is a really good one. You may have already answered. Did you add Okta shares today? What would be the best software play exposure? I mean, I like Datadog too, but Datadog may be a little too hot. You know that I like Trade Desk because I think it's one of the highest quality names. ServiceNow, you can't go wrong with ServiceNow. It just keeps breaking out. No matter how you think it's overbought, it just keeps going up. So the software right now is just a strong sector. And if we're going to go with Okta, Okta is more in cybersecurity. So we see Crowd, we see Fortinet all coming back up. And I think that Okta, with the results it gave us yesterday, it should participate in that upside. So yes, we'll exercise the calls. Excuse me, we already sold the calls. So in this case, you want to buy back the 85 calls and keep the shares. So you buy back the 85 calls, they're worth a fraction of what we paid for. So Okta, the 6, the 85 calls, worth about 230. We'll wait till the end of the week because they will decay in value. And if there's another little bit of a drop here in Okta, this is going to decay in value more. And we'll finance buying the 85 by selling something higher for, let's say, December 20, such as the 90 or the, we don't have 88, so we have 90. We'll use some of that credit right here to buy back the 85 and keep the shares, and the position becomes profitable. I think that with the results that we got yesterday, I think we have more gains to come here. Because you look at the weekly chart, if it wanted to go down, it already went down, right? So you're consolidating, and then the energy is being released. And I think there was more where that came from. Above the 20 weeks, momentum is changing to positive. I think we'll be back challenging the highs here. In no time, I think we'll be closer to 100. So yeah, I want to stick with the name here. Okay, let's take a look here, folks, at the VIX. Let's talk about Take-Two still keeping the 185 puts, perhaps all eyes in the VIX. What's keeping it low? Okay, so we'll talk about Take-Two, then we talk about the VIX. Take-Two still consolidating here, not giving us a break, so that's decay in the options. Up to you. If you think this is frustrating, not working out, the risk is going higher since nobody's selling right now, then you're better off getting out of the trade. But I think with what's going on right now, we will see pullbacks. I mean, there is excessiveness going on in the market. So looking at the VIX, what's keeping it suppressed? Seasonality. Folks think that we have the seasonality. There is no need to keep any hedging or any puts. You don't need to buy any puts. You need to close the puts that you got because of the seasonality. But I think if we close above 1361, chances are we've bottomed in volatility. We begin to see more hedging at 1388, 14, and maybe the VIX going higher all the way to 15 by the end of the year. And that's going to cause a pullback. You have to look at it this way. At some point, hedging becomes really, really cheap to a point where you can't say no. And right now, when you have an IV rank at 2%, 1.5%, and the bigger names, this opportunity will be taken. Sooner than later, people are going to take the opportunity to hedge move the VIX higher and initiate that correction before the end of the year. Senior, I want to use the technicals to set up a strangle. Apple is above the upper Bollinger Band. Does it sound smart to pick middle Bollinger Bands as the lower leg and match the delta? For Apple, that would be 230 puts, 255 calls for February 20. By the way, another way you can do it, because you're relying on the technicals alone, right? And that could be deceiving, because the daily will show you one perspective, then you go to the weekly, that's going to show you another, right? This could continue to go higher in the weekly. So another way you want to do it is you go to the expiration date that you intend to go into, which is February in this case. And you want to see where we have the highest open interest, because that's where we see concentration. So right now we have 265. That has interest and it's up about 10%. So if we go to the puts, at a 10% here, we will see that the 225 is the put number. 225, highest open interest for February. And then you have in the calls, it is 265. So that's what I would do. 265 and then 225. All right, VIX still holding here. Got a little bit of a rejection. Tried to give it a shot. Did it make it yet? Keyword yet. We still got an hour. If it makes it by the end of the day, then you know the deal. Let's initiate Apple. Let's initiate GPM, and then take it from there. SPY not showing a reaction yet because I think the NVIDIA is still strong. Apple is the most sensitive. So Apple is the one that's responding to the VIX today better than the others. So this is why if you think that the VIX is going higher, let's start with the Apple puts. 240, 235, December 20, really cheap. If it works out, then we can expand. But other than that, if you see the VIX heading lower, right? If you see the VIX abandoning all of the hedging and heading lower, then you're probably going to see more gain in the indices level. In that case, you either want to buy calls at the Qs or SPY or buy the puts on the SQs. I think that would give you a cheaper exposure, puts in the SQs all the way to the end of the week. But this chart here is your guideline in the closing hour. With that, folks, let's wrap it up right here, and we'll be back in the chat section of Discord in about 10 minutes or so. So we'll do the closing together. See you there. Thank you for joining us, and good luck with the rest of the day. Take care.